Dow Jones is rocking and Tesla is dropping. Tesla's crashing. Let's dive into everything. We'll do how this new format is that I've been doing, which is sort of market analysis first, and then we can go into all of my positions later. So, first of all, Dow Jones outperforms. You don't see that too often. But Dow Jones, massive day, like 1.1%. And it was on this day here where I last made the video and said indexes are weak. So now I will not be as aggressive and I will not be looking for any sort of breakouts unless something changes. And today, something certainly changed. And so now I will be looking for a breakout in Dow Jones. So close to all-time highs since we're on this topic of Dow Jones. So, I think this looks fantastic here. Since we're on the topic here of Dow Jones, we could go. So yeah, Dow Jones looks great. Okay, let's go over to financials. Financials, another rocking day for financials. I mean, financials and Dow Jones are pretty close. I don't know, is the largest weighted position in Dow Jones Goldman Sachs? I think it might be, but is it? I can't quite recall. It's top three. But regardless, they've got a few other financial services companies in there too. American Express is in there, Visa, MasterCard, or whatever. American Express is in there, Goldman Sachs. So there's a decent amount of financial services in Dow Jones Industrial Average that make up a decent portion of it. So it's fairly well tracked. Financials had a fantastic day. This day right here 2 days ago was, say, Wednesday, so Monday. Strong day that just gave everything back. That's when I thought, my expectations now moving forward are just blah, whatever. But today, very strong day. So since we're on financials here, and before I forget with Dow Jones, let's look at United Health. This is another very largely weighted company in Dow Jones. And I mean, I don't know how much lower this thing can go. It's sort of like famous last words there, right? But I mean, this is remarkable. It's just now looking like maybe it's putting in some sort of a bottom, Look at that. I mean, this is wild, This sucks for like shareholders or people that have this in their 401ks. I mean, this is on another level of crazy. But anyways, regardless, so, okay, I'm getting off track here. Let's look at JP Morgan. And wow, yeah, see, new all-time high today. Not in any sort of stretch territory. And good close at the highs, right? It doesn't really give any of it back. So now let's go over to Goldman Sachs. Wow, 2.4% today, Goldman Sachs. And this is looking primed for a breakout. MasterCard, kind of whatever. Visa is also whatever. I'll look at Wells Fargo here, and then Bank of America. Wow, Wells Fargo looks pretty good. Oh, shoot, and then we have to look at Berkshire Hathaway. Yeah, wow, I mean, Wells Fargo looks pretty good. B of A, BFA, BAC, Bank of America. Wow, this looks pretty good. on a weekly chart here. So let's see this on a daily chart. And, there was this gap up here to fill. So I'm always leery, of that sort of thing. But, okay. So then now let's go over Berkshire Hathaway, and that'll sum up the financial services. It's right here at this 200-day moving average. Kind of whatever. I would say given the strength in JP Morgan and Goldman Sachs, the rest of the financial services sector could sort of latch onto that. Wells Fargo looks, pretty decent as well. Visa, MasterCard are kind of neutral, whatever. Berkshire Hathaway is kind of like, I don't know. It's whatever, below this 200-day moving average, but, it's Berkshire Hathaway. So, given that, I would say financial services still looks pretty good. Again, I mean, these are just setups that I like. When I first got into this position, well, I guess I could talk about this more over when I do my positions, but, this day, gave it back, but this is of no concern whatsoever. Bounces off the 50-day moving average, has a very strong close. That's super bullish to see. I was adding in here. So this setup still remains pretty good, meets my eye. We can play for a breakout to all-time highs here, as, I believe Goldman Sachs is pretty primed for that. So that's financial services in Dow Jones. And let's see, was it 3M's is also a fairly large weighted company in Dow Jones. And this is sitting right at the 50-day moving average. Stochastic, way down here. I would say a pretty decent probability of a bounce here. Although, I don't really know. So, but anyways, Dow Jones looks pretty good. Okay. What else is in Dow Jones? Amgen. Wow. Yeah, Amgen, strong day. And yesterday too. So, yeah, overall Caterpillar's in there. Wow. 2.5%. Yeah, see, Dow Jones is such a cool index. It's, you've got like banks, financial services, which, I like that sector. You got Caterpillar, you get some industrials, you got Microsoft in there as well. It's a cool index in my opinion. So, okay, that's a side note. Anyways, now let's move over to NASDAQ. And NASDAQ is in an uptrend. It's totally fine. This is of no concern. This is no big deal. There's nothing going on except for earnings this week with Mag 7. So now let's go over Mag 7. We'll start with Tesla. And Tesla, man, did they have a pretty bad earnings. Tesla's one of those companies where I love to listen to the earnings call. And, I have for years because, Elon is just so entertaining and hilarious. And I can't really recall the last time I've heard one this bad. I mean, Elon was like pretty pessimistic for this coming year, the remainder of the, over the next year. Which usually he's hyping things up. I mean, of course, he did say Tesla, if we execute right, will be the most valuable company in the world, which, I could see that. But what he was saying was this, over the next, few quarters, like he's saying this quarter was bad. The next few quarters are going to be tough. Optimus robot, Optimus Prime, Optimus robot, is, still a decent ways out from anything meaningful. He's saying it's really hard to kind of determine what's going to be happening this year from now or 2 years from now. He thinks in 5 years things could be good, which is pretty, I mean, like I said, I listened to Tesla earnings calls for years, and I mean, Elon is like the most famous hype man of all time. I mean, people always have, really ragged on him for being, so unrealistic and whatever, and this was like a complete departure from it. So, so, so 318, so 332, 318, let's see this, 318, this is of no concern. I have worked around this position and some other positions to be able to be totally comfortable with a 10% move here in Tesla one way or the other. So, right now we're at like 5% or 4 or yeah, so this is probably 4-ish% down. So it's completely in line with my expectations. So, well, as a matter of fact, it's twice as good as my expectations or what I was planning for. So I don't really care. We'll see how tomorrow shapes up. Again, I'll go into more detail about this and my positions, but as of now, this is whatever. Now Google, going over here to Google, they had a really good reaction to earnings, and so cool. There's this gap up here to fill, so I'd be a little bit leery of this. But man, what are they up, like 2% right now? Yeah, probably like 2% after hours, and so cool. That's fine. Google. Let's see how Netflix has been performing since the earnings. Bad. So you gotta take things. So Tesla, bad earnings and really bad expectations here in the coming quarters by Elon, what Elon's saying. So we'll see how the market reacts. But anyway, so Netflix bad, Tesla bad, Chipotle here, which I know doesn't really, in the broader markets is kind of whatever, but they're down like 8% right now. Yeah, I mean, look at this. They are getting wrecked. So for the earnings season thus far, it's a pretty mixed bag. You have AT&T that was down huge but recovered this entire move. So anyone bearish can no longer be bearish. I mean, this is insane. So overall mixed bag with the earnings. Okay, so now we'll go over to Microsoft. Let's see how Microsoft's performing after hours. Pretty muted, given how Google is. Yeah, so yeah, pretty muted. But again, I mean, Microsoft. I mean, look at this. This thing doesn't even pull back. There isn't even a pullback. I mean, you hit 21-day EMA and boop, completely just bought. Yeah, the stochastic, once it starts moving down here a little bit more, so will be great to go after. But yeah, I mean, yeah, Microsoft just throw everything at it. So that's still looking great. Okay, let's look at Amazon. Which reminds me, I think. Oh no, Amazon's in Dow Jones. I was thinking it's in the communications ETF. It might be. Anyways, which makes no sense. But anyways, uptrend above the 9-day EMA, above the 21-day EMA. It's in an uptrend. Nothing to say. It's all good. Let's look at this on a weekly chart again. Like no sort of stretched, no extreme levels. So, no opinion one way or the other here. No opinion other than the trend is your friend. If you had to press me for an opinion. Okay, now Meta. And so Meta is in XLC, communications sector. Which we'll go over on Tesla. Meta looks good still. Yeah, looks really good. Like I was saying, I love this sort of setup right here. This day that we talked about, was this Monday or Friday? Maybe, I don't know. But we talked about this, and as to why this is an awesome setup, and it still looks good. It looks great. You could figure that this is some sort of trend line break, or just a continuation higher. So like I said, Meta looks really good on a weekly chart. Meta looks fantastic still. And then let's see on a monthly chart if anything's in sort of crazy levels. And not really. One thing that Jim Ropola says is you can kind of disregard the monthly chart for extreme levels of RSI, because oftentimes with leaders they'll be like years of the RSI being really high with the leaders, right? So yeah, I mean, look at this Meta 2015, 3 years essentially of just insane RSI on a monthly chart. So okay. And Google, blah, 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 Apple. Look at Apple. Yeah, still fine. Yeah, Apple's totally fine. And that's it for Mag 7. So everything's all good with Mag 7. And as a result, the NASDAQ 100, it's all good. Bad day for Tesla. It's kind of Tesla has almost sort of become irrelevant to the broader market, and that would be a good thing. So yeah, I don't put any weight into this for broader markets. So okay, Tesla. So that's it for Mag 7. Let's just have a look here at S&P 500, and yeah, makes all-time highs. Are you kidding me? Yeah, nothing to say. All-time highs. It is impossible to be bearish if something makes an all-time high. So you can't do that. Or you could, but that's ridiculous. Russell, super strong day. Small caps, really strong day. Again, this is a really good sign. In a healthy bull market, you want to see money moving out farther on the risk curve. And when was the last, all through here, 2022, sort of at the end of that nasty bear market. As NASDAQ and ES were rocking, Russell was completely flat, and the only things that were working were Nvidia, Microsoft, which reminds me, and like that's it. You know what I mean? It was like literally those two companies. I think there was like a couple more, but it was basically like just those two companies, and so it made getting very aggressive at that time when I wanted to very difficult. And so with that being said, small caps, they're rocking. That's good. What was the company? Oh, Nvidia. There's nothing to say here. This is, you want to see some sort of consolidation. You don't want to see things just go straight up. Well, I guess you do, but but in order to sustain further moves higher, there needs to be some sort of consolidation period. And so, yeah, one around here would be welcomed. With that being said, let's go over to SMH, and totally cool. SMH, rock and rolling. Taiwan Semiconductor, straight up, baby. Let's look at AMD. AMD's now working good. So again, it's sort of same thing. Like you move money, it's going farther out on the risk curve in terms of semis. So This sector still remains extremely hot, which is obviously good for broader markets, as Nvidia is like the largest company in the world or whatever. And Taiwan Semiconductor, very important as well. So there's that. There's that with all the indexes. Now let's go over. So we went over XLF. We'll go over XLC. Communications looks pretty good here. It looks really good actually. And Google is in XLC. So this should perform well tomorrow, given the reaction to Google's earnings. And Meta looks good. Meta's also in XLC, and I think those make up like the majority of it. So, XLC. Okay, so XLU, and yeah. So on this day where I said I can't believe I missed it, but it still looked good, so I did go after it, and we can talk about that in positions. But if this thing, so this is utilities is broken out to all-time highs, and today was pretty nasty. I mean, lots of selling volume, which you don't really like to see. But this was on the third day breakout, so that's to sort of be expected. Typically three days after some sort of major break is pretty reasonable to expect around a 3-day move. So this is not of concern. I mean, this volume certainly is, but if this could sort of pull back, get back to the 21-day moving average, definitely go after this one again, and we'll discuss that in the positions. So then now let's go over to real estate, and look at this. Look at this. Big break over the 200-day moving average. This can now sort of go on a watch list, and when this meets my criteria, I would probably go after this. Cool. Let's go over biotech, and this is cool. Yeah, this still looks pretty good here. Honestly, there's so many better things to go after, but I could certainly see this working. Healthcare, look at that. Bam! Who knows? Maybe this is really going to help United Health. Kind of rocket higher. Yeah, I mean, at some point, come on, this is insane, and when this does turn around, it definitely helped Dow Jones for sure. Plus Goldman Sachs. Ooh, that looks so good. It's getting so close. Okay. Let's look at the energy sector here. Let's look at industrials. Yeah, there's nothing to do with energy. Industrials, man, so strong, so unbelievably strong. That's awesome. Go America. Caterpillar, just rocking. I love to see that. Train, wow. Booyah. So freaking cool. So cool. I love that. And what other sectors are we looking at? Who knows? Let's see how our German friends are doing. Yeah, unbelievably strong day. Wow. A clear uptrend, basically all-time highs. Mexico is, bam, very strong day, back above the 50-day moving average. None of this really sort of meets my criteria. I mean, not really. I could definitely see this working. But super strong. Let's look at Japan. What? What the heck? Are you kidding me? Wow, what a move. That's a 4% move? What? Whoa. So, again, I don't understand how anyone can be bearish. Look at this, even Malaysia is up. Let's look at India. Yeah, looks pretty good. Yeah, and it looks pretty good. So, I mean, yeah. Don't know what there is to be bearish about. That is for sure. And so now let's go over gold and silver. I really don't have an opinion. Yeah, silver's in a clear uptrend. Yeah. So there's that. Let's go over wheat and corn here. There's nothing to do here. There's nothing to do here. We'll look at palladium, and this is in a clear and obvious uptrend. Look at copper. Same thing. Wow. So let's look at China. Clear, obvious uptrend. Yeah, I mean, yeah, okay. Now we'll go over to nuclear energy. It just a massive day. You know, look at this, 9%. CCJ back to 79, right? Just almost all-time highs again. SMR, that position that I was in. Yeah, I mean, this is just screaming money is buying, nuclear energy. Just wild. Just wild amounts going in. Yeah, look at this. 75, so double. This is like tripled in 2 months. So, yeah, again, I mean, this is just screaming go after these things. And we definitely have and will continue, that's for sure. Oh, let's look at this construction IPO. Yeah, some sort of uptrend. Okay, so that's that. Now let's go over my positions. So that's it for market analysis. Basically, just to sum everything up, we're in a bull market. Things are rocking. No reason to suspect something different just because the reaction to Tesla's was poorly. In my opinion, I don't think Tesla matters too much on indexes anymore. And overall, there are a few different sectors to go after. We have small caps working, Dow Jones, industrials are rocking, making new all-time highs on serious heavy volume. Financials are looking good. So semis continue to look good. So yeah, it's all good. That's it for any sort of market thoughts that I have. Now let's go over my positions. So since I made the video on Monday, maybe it was Friday, I can't remember at this point, I have closed out those debit spreads in CCJ, and as it sort of gave this back, like I said on this day, I think I made a video on this day, you hate to see this sort of give this back and sort of kind of a weak close. And again, I'm just talking, these are just short-term basis. So then the next day, boom, in the morning, get out of those. Those were August 15 debit spreads, 75 on the long call, 85 on the short call. $2.80 is what I paid. Sold for $4.22, which is a 50% gain. And yeah, I love debit spreads. The reason debit spreads get a bad rap, the only reason is because the upside is capped. But you're on pretty conservative debit spreads. A 50% return in a couple days from not that crazy of a move is awesome. I love debit spreads. So yeah, now this overall industry is just on fire. Any pullback is buyable. Again, like with CCJ here, this really hasn't even been a pullback. This was an awesome pullback to get into here, but this is when I was at SMR, so I did catch this move, but just a different stock, same, they're correlated. So yeah, and it's a good thing that nuclear energy industry is performing well, in my opinion, as a consumer. So, okay, there's that CCJ. Now, the other thing that I closed out would be utilities. And first thing this morning I did, and turned out to be, the right move, and, rather lucky one. Just like right away. Boom, market opens, you give it a couple minutes, because sometimes the pricing of things is just insane. Give it a few minutes, 5 minutes, something like that. Maybe 10 minutes, get out. So XLU, September 19 was the expiration on these. September 19 was expiration. $85 was the strike price. And I paid $180 for those and sold at $277, which is a 53% gain. And again, this is, in utilities sector. So, and I missed this whole move. I missed this entire day. This would have been a much better gain than 53%. But regardless, that's the power of options, right? And this is still, again, this is utility sector ETF that there's like zero volatility priced into this thing, and this was over the course of one day. So this was the day that I put these on, 2 days, and then this morning, boom, got out. Now, why would I get out of these this morning? And the reason being is, like I said, I expect 3 days of a price continuation following a breakout. There's lots of data to back that up. After a breakout, you can expect 3 days of, continuation, and, obviously it could be way more, but just generally speaking, around 3 days. And in sort of options trading or swing trading, you're looking for a major move, and that's sort of it. It depends on how you trade options, but generally speaking, it's going to be a shorter term basis. And so I see the gap up this morning. It's on day 3 of the continuation, from gap up, and that's all I needed to see. Get out. And I don't know. I don't recall how much this opened up this morning. Maybe another whole percentage point or something. But again, this is utility sector, so a whole percentage point in XLU is a lot. So the price of those options contracts are going to reflect that. And so there's that. Another one that I got out of was these in TQQQQ, and we'll go over as to why. So these were the September 19 $86 strike price that I paid $8 for, and it was on this day right here. right at market open, gap up to all-time highs. And I really, really didn't want to buy in there, but I talked myself, out of it, saying don't be dumb here. We're in a bull market, an uptrend, a gap up right to all-time highs. I mean, come on, you got to go for it, right? So anyways, now end of day today, I got out of these. And, well, actually right here. So not quite end of day, but pretty close. Maybe 50 minutes to go. And so I closed this out. So those are $8. I closed it out for $7.85, which is like a 2% loss or something like that. It's sort of essentially flat for all intents and purposes. Still a loss nonetheless. But I had no cushion in these whatsoever. Earnings were coming into today, Tesla and Google. And Google has been the laggard in the industry. And Tesla is Tesla, so it could fluctuate 10%. So I wanted to take some risk off the table. And so that's what I did. So there's some sort of art involved in trading. It's not 100% science-based or data-driven, although lots of algorithms are programmed that way. But I have a little bit of discretion in how I do things. And so based upon the performance of the month or whatever the case may be, am I willing to risk this? And in this particular instance, I was not willing to risk any money for the ability to make more money in this current position. I was not willing to do that. So I closed that out. Not to say that this doesn't look good. This looks fantastic. And as we can see, this is going to open up tomorrow pretty good, unless the reaction to Google somehow turns around. But who knows? I have maybe it certainly could, but I was not willing to risk this going into earnings. So now, with that being said, that's one single position that I cut. So I still have plenty of exposure. And for example, now we might as well go into it. So XLC, like 12% of this fund or something is in Google. So, definitely still have exposure. So those are September 19, $108 strike price. September 19 is expiration, $108 strike price, $2.90 is what I paid for them. Those are currently $4.50. And so again, so I have cushion in this position. I didn't have cushion in the NASDAQ position. There's a little bit of exposure to Google in this, so that way I could still capture that move. I still have my Dow Jones position, which we'll go over, but Microsoft's and Dow Jones, so Microsoft and Google sort of move together, right? So I still definitely have exposure to it, and just was, from a risk standpoint, wanted to, de-risk a little bit. So XLC is still working out great. This looks fantastic. I mean, what a strong day. Weekly chart looks good. And like I said, Meta's in here, and Meta looks good. Google's in here. Google looks good. So, Google looks okay. It was a little bit sketch here, right? It's kind of stalling out. Well, I would take that back. It's not really stalling out. It just had like 1 or 2 days of not moving higher. That's not quite stalling out. But, right here, right here at its previous earnings, 1, 2 quarters ago, and so that's kind of, you're like, oh man, is this going to fill this gap, for this earnings or not? So anyways, that's all the thinking there. Okay, so now let's go over financials. We've kind of already talked about this, but look at this. This is fantastic. I'm still in this position. September 19 is the expiration, $54 strike price. So, it's out of the money. Again, like I said, there's a little bit of art in my strategy. It's not just 100%. This is the same thing that I do. Lots of times I like in the money, longer dated call options, but sometimes not, so if, things are sort of rocking and rolling, just broader markets are strong, the macro condition remains good for equities, which is what the environment we're currently in. You can get a little bit more risky, and again, a little bit more risky is like $1 out of the money in a sector ETF. So the risk it's all relative. But anyways, so those are September 19, $54 strike price, 81 cents. Here's what I paid for those. Those are currently 93 cents, so these are working just very good. And I'm still very happy with this position. Like I said, Goldman Sachs looks good. And JP Morgan looks good. MasterCard and Visa are neutral. Berkshire Hathaway is sort of neutral. So overall, I see no reason to get out of this position, although this is a clear and obvious, place where you would sort of get out of it for all the reasons we just discussed. Well, this is a wait and see moment, right? So yeah. XLF. Oh, and then if we look at this on a weekly chart, this looks so good. Like, look at last week. Boom, nice strong close. Thus far this week, if this can break out, it's not even in anywhere stretched territory at all. So yeah, that would be cool. XLF. Now let's go over to Rumble, and yeah, you can see I have it highlighted over here. So Rumble, I sort of forget about this a couple different times. We have been in this position since this day. I think it was this day. 2 months I've been in this? Is that right? Man, time flies. Yeah, it's been 2 months I've been in this position. Okay, so this is also another reason as to why having, longer dated call options is also a good idea, to where, you don't have much volatility on the downside, because there's not much time decay that happens yet. So these are October 17 is the expiration, $12 strike price. Because October 17, I still think that's like 80 days or something like that. So we still have a decent amount of time in these before any real time decay really starts hitting. $12, 82 cents as the average cost. Those are currently 95 cents. And this has been a hilarious position of mine where, when I put this on, I said $10 is the obvious sort of, place to get out and price target. And this day, how this opened up like 12% directly at $10. I told myself there's no way you can get out of this position. That's insane strength. Even though that was exactly at my price target, I said, there's no way, you can't do that. Don't get out here. That's weak to get out. And it just completely gave it all back. And then to even go negative on the day, I'm just like, that's, you never really see that too much. And then just sort of like, I'm like, oh no, 200-day moving average, hang on, but the stochastic was down here, so I figured there's, probably a pretty good likelihood that we're getting a bounce there, and then we did, and then just to give it all back, and then boom, rocketed higher up to like $10 again, gets rejected, and then this day, Um, gosh, when was this? Monday. Look at this, up to 11. And again, I thought the same thing. Here we go. Rumble's freaking rocking. You cannot get out of this position, and then just smashed it all. You know, I'm like, oh, well, there goes that. And then yesterday, I thought, man, if today we could get a strong day, this is turning out to looking pretty good. And just out of nowhere, this started just going straight up in the air. Yeah, see? Like, you know, it's a 5-minute chart, but this is over the course of like what? 4 hours, nothing. And then all of a sudden, boom, I just see, it's like, what? So this looks good. Now let's talk about Rumble. Okay, first of all, from a technical analysis standpoint, I mean, come on. What is this? Looks textbook, picture perfect, amazing. This could, of course, fail and roll over. Nothing is 100% guarantee, so take that out of. But just saying, this looks so good. This all meets the eye. On a daily chart, let's look on a weekly chart, and yeah, I mean, come on, let's get going. But consolidation with a company that can really add some jet fuel. So from a technical analysis standpoint, this looks good. Okay, check. Rumble's financials, its growth. I know nothing about Rumble. I just signed on to Rumble like last week or something. I've never even gone to rumble.com. Never. And I was like, you know what? I'm in this position. Let's see what's up with Rumble. So I'm like, oh, this is super cool. It's just like YouTube. Now, yesterday, YouTube, well, it's like a free speech version of YouTube. So yesterday, news came out that YouTube had removed like thousands of content creators for disinformation, which just means, YouTube doesn't allow free speech. That's what that means. And so these content creators are going to go over to Rumble. And here in America, free speech is a big deal to most people. And for people that, it's not a big deal for, that it really should be, because that helps with individual freedom. Free speech is so important. And like I said, here in America, most people believe in free speech. So this is really good if you're bullish on Rumble. Where I saw that article, I thought, dang, this is good for Rumble, with YouTube experiencing massive growth, Netflix saying, YouTube has become a problem for their business, which just shows how many people use YouTube. Well, Rumble is like YouTube, except for more of a free speech version of YouTube. So, same sort of customer base in terms of content creators, as well as viewership, right? And the platforms are pretty similar. I don't really understand if there's much of a difference. I really don't know. People are streaming video games on there, and making other videos, and news videos, and I don't know. So it's like the same thing. And so that all goes into the bucket of being bullish for Rumble. So now there's that. That was kind of a long monologue for Rumble. And who knows, maybe Rumble can really start rumbling here. And okay, so let's go over to Bitcoin. Now, Bitcoin is looking really good again. As you guys know, we had caught this whole move, bam, and got out on this day. And this has been a clear and concise and chill pullback of no concern whatsoever. Still respecting this 9-day EMA. and in a box sort of consolidation with the stochastic coming down around 40 is when the trading master says for stochastics you can go after it after the position, and that's basically where we are. And so I started this a new position here in Bitcoin this day, like at the highs. I mean, it was this is how everything looked. Nothing crazy. I'm not, like we got real risky here. So and really good returns were made here. So as I'm starting this position, I'm not going to just put in the same amount of money or the same sort of risk on this to where if this failed, it wouldn't, I would still maintain the vast majority of these profits. So there's some wiggle room, right? So again, I mean, not everything is like a complete science base. There's some art to it a little bit. So anyways, so IBIT. So here's how, I get a little bit more conservative now. So, with all of that being said, like I explained everything, so how then am I going to be more conservative in my position and not risk so much to the downside? And the answer is a longer dated call option, like I say all the time. So those are October 17 is the expiration. So again, that's like 80 days out or something like that. So plenty of time. We have a full 20 trading days. Wow. So like a full month before time decay really starts to become a thing. And the strike price is $65 is the strike price. So that's $2 in the money. That's what, 5% in the money. So yeah, that's goes into the whole bucket of a conservative call option strategy. That's certainly conservative. Okay, so anyways, paid $770 for those. Those are currently $740. And like I said, I mean, basically at the highs, so of this day, or maybe it was this day, I don't know, whatever. You're basically at the highs, and with all this sort of, pulling back, although it's not much at all, but certainly enough to really move the price of options with a more conservative, longer dated, and the money call option really doesn't matter. So this is of no concern. I don't really care. I want some exposure to this if all of a sudden, because this is a decent amount of consolidation at this point. What is this, a week? Yeah, so, in the grand scheme of things, this is not a lot of consolidation, but after a nice, massive move higher, a week of consolidation is fine. So again, a conservative position where I'm risking such a minimal amount of the profits that we took here to not miss a move higher here is definitely worth it. And if this does start rocking, I will get more risky with this position. So with that being said, let's look at MicroStrategy. And MicroStrategy today was down a decent amount. And, we're getting down to these levels here where MicroStrategy looks like, a buy, right around the 50-day moving average. And MicroStrategy is like a leveraged Bitcoin play. So, yeah. With all that being said, this, looks like a pretty decent place for MicroStrategy. And since MicroStrategy, sort of tracks Bitcoin in a sense, that could also be good for Bitcoin. Let's go over some Bitcoin miners here. Marathon, wow, just down 11.5%, no big deal. CleanSpark, down 3%. Riot, up on the day. Look at that. Good for Riot. They've got some decent Bitcoiners in that company. So I do like to see Riot performing well. Let's see Hut 8. And Hut 8. Oh my gosh. And I'm wearing my Bitcoin shirt today. HUD 8 looks like a pretty good spot where you would go after this. So again, you know, these are all things that go into either the bullish camp for Bitcoin or the neutral. None of these things here that I'm seeing are bearish. You know, Clean Spark or Marathon being down 11.5%. You shouldn't have diversified away from Bitcoin. That's what you get. Which, by the way, I have no clue if maybe they scrapped that strategy. I really have no clue. I don't know when did they implement that. It was so long ago now, a year. so I have no clue. But yeah. But this, look at this. See, sitting at the 200-day moving average. Wow, look at this level. The $15, $16, $17 level. I mean, are you kidding me? This goes across this whole thing here, right at the 200-day moving average, 50-day moving average, sort of moving up. So again, all these things are into the bullish / neutral category for Bitcoin, and the macro regime continues to be good. It's accommodative to risk assets. So what are you freaking out over here? Nothing is the answer for me. Okay, Dow Jones. Man, I got a lot of positions. Lots of things have been going on, actually. This has been a pretty cool month, man. Yeah, Dow Jones, like we're talking, look at, I mean, just rocking. Dow Jones is about to break out to all-time highs, maybe. And what the heck is this, down after hours? Oh, yeah, it's of no concern. So, oh, look at this, YM. Futures, it did hit an all-time high. Yeah, cool, okay. So Dow Jones, September 19 is the expiration, $447 strike price. Hey, look at that. These are now in the money, baby. That's what we like to see. $10 is the average cost that I paid for those contracts. Those are currently $12. So booyah. Let's keep this momentum up here with Dow Jones, my all-time favorite index, which really does sound sort of cheesy to say, but I mean, it is true. Like I said, it's got financial services in there. You've got industrials in there, mixed in with a little bit of tech. I mean, come on. This is like America's index. Okay. Oh, all right. Shake Shack. We'll go over Shake Shack. I wonder how this is reacting after hours with Chipotle. I have no clue if these are like if these are tracked closely or not. I have no clue. That's something I have not looked up. Let's have a nice look-see here. Let's see this on a weekly chart. Maybe that'll help. Bam. I would venture to say these are not. So, but with that being said, I could see tomorrow, I mean, you've got, you know, sort of the major fast food chain that I would consider would be the closest to like a Shake Shack sort of style, right? You know, because Shake Shack is what do they call that? Fast casual? Yeah, something like that, fast casual. You know, it's like healthy McDonald's, you know, Shake Shack, or, you know, like Chipotle. It's like healthy Taco Bell. I don't know if anyone said that before, but, you know, you guys get the point. I mean, you know how it is. So, anyways, like I said, none of this was of any concern. I had no opinion. I didn't care. This doesn't matter to me. I would have taken this down to the 50-day moving average. None of this mattered. Equity position, you know, I'm not really losing anything. The money that's in Shake Shack is not tied up. You know, I still have cash, so I'm not of any concern that this was been doing nothing here for a couple weeks. You know, it doesn't really. I like I said, don't really care. As a matter of fact, today, as this crosses back above these moving averages, I added to this. And so I now have a good position size in here. I'm cool with the position size, you know, maybe a little bit more, maybe like 10% more I can go here. 20% more I could go here. But overall, I'm happy with this position size. You know, and now it's in a sort of kind of meaningful position to where, to where it really does, make a difference. And so, but like I said, I still have some wiggle room here, 15, 20%. And so I added to it. Now it's at $133.30 is the average cost basis. So it's up a few bucks. So cool. A few dollars, we'll take that. You can get a Starbucks drink with that. Maybe we could get a French fries from Shake Shack. Okay, now let's look at this on a weekly chart here. And this is fine. It's whatever. Monthly chart, wowzers. Like I said, a little bit funky, sort of what's going on. But if this is such massive bullish candle that I've ever seen in my entire life. And if this can start moving higher and get in a well-established uptrend, there is so much upside potential to a chart like this. Just forget about the company. I have no clue where Shake Shacks really are. Like, I know of a couple around here, but I think it takes like 30, 40 minutes or something to drive to one of them. So I have no clue what states they're in. I have no clue. But what I do know is there is growth potential here, just from a standpoint of where are these Shake Shacks? This company's just breaking out to all-time highs. They get picked up by Delta. And where are the locations? I know from the ones I've gone to, the food there is good. So, does anyone even know about Shake Shacks? Maybe, but I don't ever hear anyone talking about Shake Shacks, and yet this company is at an all-time high. So, is there room to grow? Yes, definitely. That's all you need to know. How the financials. I don't know. I'm more of a quantitative researcher, more qualitative more than qualitative. So, yeah. So that's all good. That's cool. Now Tesla. Let's go over Tesla again. And like I said, I positioned the portfolio to be totally cool with a 10, 12-ish% move. One way or the other, upside, downside. I have no clue which direction Tesla was going to move. All I knew is if I'm not prepared for a 10% move, then that would be dumb. So we're at like a 5% move right now. And like I said, so that's twice as good as what my expectations were. So we're pleasantly surprised. So now in regards to their quarter and the company, here for the coming months is a little bit worrying, but I will let the market decide what my opinion is on this. My opinion right now is pretty bearish, where I was really quite shocked. I've never heard Elon so low energy. I've never heard him really say like, this quarter sucked, next quarter's gonna suck, Q4, Q1, Q2 are gonna suck. I'm like, what the heck? He's like, it's all gonna suck until like maybe 2 to 5 years. I'm like, what? Who says that? But anyways, that's why it's always fun to listen to Tesla's earnings call. It's always the best. There was a question about like, are you guys gonna do an AI day? He's like, no. We get our competitors just copy us, so why even bother? Like, how are you gonna pay for the Optimus robot? They're like, well, once you prove something can cash flow, it's easy to get financing. And the guy goes, in the interim, they're like, balance sheet. It's just a funny call. So I really know. I don't really care. I honestly, I don't care. Like I said, I built in, 10% wiggle room. Any sort of like real break below 300 is of concern. Until then, I don't really care. Yeah, like I said, I've got a 10% wiggle room, which is around 300, which is basically what my price target would be of like, this is of a little bit concerned depending on how it would break 300. So I'm totally cool, happy with this position. I don't really think Tesla has much effect on indexes like it used to. So this doesn't affect my, overall opinion on markets. You got to expect that Tesla is, volatile. So one way or the other, right? Sometimes positions work out, sometimes they don't work out. I'm positioned for volatility in this. Like I said, 10%. So if we get a 5% move, I'm cool. I don't know. I'm positioned to withstand, 10% drop. So 5% drop is fine. So that being said, I have added to this. But anyway, so the average cost basis is $329.70. And like I said, I don't know what else there is to say. I was very shocked with how this call was taken. But oftentimes you think, man, how much sort of worse can things get? Right? I mean, like I said, Elon Musk was basically like, this quarter was terrible, the next one's going to be terrible, the foreseeable future is going to be terrible. They're taking away all the incentives for EVs, they're taking, tariffs, they're taking away incentives for solar. Optimus Robot, is far away. Robotaxi is far away, just in Austin, then they're going to do San Francisco, right? So, we're talking, so for the foreseeable future, in my humble opinion, that means nothing. I don't really know what the bright spot is other than how much worse could it really get? Famous last words, huh? So I'm trying to sort of talk through this and form an opinion on Tesla and the earnings and the coming months for Tesla. But like I said, anything in between here and 300, I'll have my stops below 300. I don't. All that's built in. So I don't, really care what's happening here. But so that's that. That's it. That's all the positions. Lots of positions. Lots of things were going on. It's been a really good month. So that's another reason as to why I wanted to take a risk off the table. I don't need to risk anything. I'm completely satisfied with the performance of the accounts this month and last month. So what am I? Another couple percentage points. It's been good, right? So I don't want to give up too much of that just for a few more percentage points here. So that's it, and we'll catch you guys next time.